Christina Sewick, and you're with Winter Maritime Capital Partners. Today is Tuesday, July 11th. I am about 18 minutes late to my first true live stream here. I kept trying to see the little eye up at the top to make sure I was live, but I didn't see it. So anyway, I wanted to do a shout out to Rick Helps Real Estate. Thank you so much for helping me figure out the back end stuff here and hopefully attempt to be better at live. So anyway, my family and I have had a day, and it brings up an important topic that we'll talk about in a little bit, which is just the importance of having homeowners insurance, and the great importance of that. So we have a family home in Quincy, Washington, about 10 miles west of Quincy, and it got engulfed. Thankfully, the home did not get engulfed, but the land around it did. We own about 150 acres around the land, and we didn't know last night if the house was going to be okay. Thankfully, it was, and to my understanding, so far no structures have been lost. But if you want to see what I'm talking about here, let me show you. So this right here is the Baird Springs fire. They don't know how it started yet. But our house, this is Crescent Bar down here, for those of you that know where that is. It's about 2.5 hours east of Seattle. It's a popular vacation, destination resort, not too far away from the Gorge Amphitheater. And then our house sits right sort of, here's 28. The fire jumped 28, Highway 28, and jumped over here. And our house is basically right here. That sits right above White Heron Cellars. And thankfully, I believe most of White Heron's crops are okay. But yeah, it's really scary when you're looking at a map and it says level 3 around it, and your house is in the middle of those flames. Thank you so much to all of the fire department and crew and everybody who fought like heck yesterday to contain that fire. It was a level 3 evacuation, as you can see. And as of the latest update we have, I know about 2,400 acres of brush and agricultural fields were burnt. So don't know how it started yet again, but I believe all the houses and everything, structures have been okay. So anyway, the importance of having homeowners insurance and homeowners fire insurance, it's just so important, especially if you live, in more of an agricultural rural area. But anyway, that was how Monday night went for me and how today started. But yeah, I hope everybody's safe out there. I hope everybody that's been affected is safe. We're originally from Washington, from the Seattle area, but we've had this house for a very, very long time, for many decades. And we're just happy that my parents are okay. They're up there. They got out in time, and just so thankful for the fire crews that stayed up there and fought, for our house to be okay. So, and everybody else's homes as well. Okay, well, moving on out of that into the market, where I like to go for market update is the Cromford Report, to kind of tell you more about what's going into the Phoenix market. But first, let's talk a little bit about mortgage rates. Mortgage rates, they haven't, we were kind of hovering into that mid 6% range to high 6% range for such a long time. Months, I would say 2023 in general has been a pretty volatile year compared to, years before. And then last week with the news of the CPI reports and stuff coming out, and tomorrow's CPI report will give us a little bit better of an idea of what's to lie ahead. So to read this article, I love to go to Mortgage News Daily. To back up a little bit, I guess the 30-year fix today was at 7.09%. So again, we bounced up over that 7% line, and the 15-year fix is at 16.42%. So Matthew Graham with Mortgage News Daily writes, while experts might be able to debate the underlying causes, they can agree that inflation is the key reason that rates skyrocketed at the fastest pace in decades to the highest levels in decades in 2022. They could also mostly agree that the persistence of inflation coincides with the persistence of high rates. The Consumer Price Index, or CPI, is one of the most important measurements of inflation on any given month. And the latest installment will be out tomorrow morning, so big news comes tomorrow. Economists submit forecasts to data aggregators, and the median forecast becomes a consensus. If the actual number is below the consensus, rates tend to rise or fall accordingly. Tomorrow's CPI will be out before most mortgage lenders have published rates for the day. That means a loan would need to be locked by today in order to avoid rolling the dice with tomorrow's CPI reaction. So more news to come tomorrow. Now let's read the Cromford report. Again, I love to go to here for more data. Let me just increase this screen so I can see better. Okay, again, as I said, Mortgage Rate News Daily published a summary, which we just read, based on Black Knight's data, which actually kills off the housing rumors that thrive on YouTube and other social media. The summary is based on national rather than local data, but highlights extracted from this article include, so it's important to always go to the facts. I know that we see a lot of things on YouTube with doom and gloom, and I know that gets a lot of clicks, but it's important just to go back to the data and to kind of see, where you think it might be going. I'm here to provide you with the data. I will give you some commentary around it, but really that's up to you. It's up to you to decide, if now's the time to buy or sell. And we're just here really to be the knowledge brokers, the knowledge agents, just providing you with the data and hopefully being your trusted resource for real estate when you're thinking about buying and selling, investing, and what have you. Okay, so firming prices now fully erased the pullback throughout the last half of 2022 and lifted the seasonal adjusted Black Knight Home Price Index to a new record high in May. Not true of Phoenix, however. Inventories have deteriorated to 95% of the markets and are about half of the pre-pandemic levels. Housing affordability remains dangerously low to 37-year lows we reached late last year. The national mortgage delinquency rate in May was 3.1%, returning to a near record low. More than 60% of mortgage holders are sitting on first liens with rates below 4%. Okay, so that's something, this is really important. So when we're talking about, we basically have this standoff right now of not enough inventory, and we're saying, well, demand is way down. Well, demand is down because we don't have any inventory on the market. We're in 37-year lows of inventory. And we'll go next to see, we'll see exactly how much homes are available in the Phoenix market a little bit later. But that's what's happening. It's simple supply and demand. We still have demand that's outpacing our supply. We just don't have any supply. And so what's, people are saying, well, when rates come down, maybe I'll take that opportunity to buy. Well, do you want to do that? Because there's a lot of buyers that have been sitting on the market thinking the same thing that you've been thinking, and they're all going to jump in at the same time. Then what happens? We know what happens. There'll be more demand and not enough supply, and then prices will go back up. So I personally think right now is a pretty good time to buy, but more on that later. Okay, well, this has been confirming what Cromford reports and what we've been saying for months. You can use this independent and trustworthy source of mortgage data to counter incorrect assumptions that may have been picked up by people. So again, we use this as real estate agents here in Phoenix. This is a fantastic data source for us. It takes everything that is on the market and deciphers it for us and puts it into nice data that we can read and share with our clients. Okay, if Maricopa County recordings of June are analyzed in detail compared with June of 2022, we see the following changes in the mix of residential sales, single-family, condo, townhouse. Trustee sales to third parties are down 47%. REO sales are up 333%, but only from 3 to 13. Fix and flip sales are down 37%. New construction closings are up 7.4%. FSBO sales outside of the MLS are down 53%. Normal MLS sales are down 13%. Offer pad sales are down 76%. Open door sales are down 56%. Offer pad sales are down 70, I think I said that. Okay, Redfin sales are down 100% from 4 to 0. Short sales are up 12%. Wholesale transactions are down 42%. Purchases by institutional investors are down 88%. And overall sales are down 19%. So we can see that overall transaction volume is down almost 20%, but the drop is not evenly distributed. New homes are having a very good year. 1,646 were closed in June 2023 compared to 1,532 in June of 2022. Investors and iBuyer volumes have collapsed as FSBO's normal MLS transactions are down only 13%, less than the overall market. U.S. banks are set to report their biggest jump in loan losses since the beginning of COVID-19 pandemic. Bloomberg estimates that JP Morgan Chase, Bank of America, Citigroup, Wells Fargo, Goldman Sachs, and Morgan Stanley will need to sell to write off a combined $5 billion tied to default loans during the second quarter of 2023. They also expected to set aside a further $17.6 billion to cover loans that will likely go bad. Both of these figures are nearly double what they were a year ago. The bank's due to report earnings in the next 10 days. However, this has very little to do with the housing market. The main types of loans that are going to be bad are credit cards and commercial real estate. So that's really important to know when commercial real estate. Let me just stop right there and let you know my thoughts on that. I think a lot of the commercial real estate payments are going to be coming due in the first quarter of 2024. And a lot of those people that have loans out on commercial real estate leases, or the buildings rather, they're not going to be able to refinance their loans to a way that makes sense. And they may be walking away because a lot of people haven't returned to work yet. They're still working from home. Office buildings are bare. And so if people aren't going into the office spaces anymore, they're struggling to find tenants. And I think that's the market to look at. I don't necessarily think it's the residential housing market when you're thinking about something. I don't want to use the word crash, but if you're thinking about something that loans to be concerned about, I think that's over in the commercial real estate space. Loans concerned by owner-occupied residential property are performing extremely well with low levels of delinquency compared to long-term averages. So here is the Concord Market Index report for the 17 largest cities. So we take a look at this. The market is softening, and we have 8 cities showing improvement for sellers over the last month, and 9 showing deterioration. The average over the last month is a decline of 1.5%. This is the first negative monthly movement since early 2022. There's a wide range between cities improving for most sellers. Buckeye, Chandler, and Paradise Valley are all up 11%. So we can see Buckeye 11%, Paradise Valley 11%, and Chandler at 11%. And those moving in favor of buyers, which is Cave Creek, which is down 27%, and Glendale down 15, and Tempe down 14. Demand dropped sharply between June and July. The third quarter is never the strongest part of the year, so there's no reason to expect much for the next 3 months. However, supply of new listing remains very weak, down more than 40% compared to this time last year. This is likely to keep supply low despite the weak level of demand. Lower pricing looks unlikely while supply remains tight. 16 cities are currently in seller's market, while 1, Buckeye, remains balanced. So balance is anything that's going to be closer to that 100 marker. No major city is below the CMI of 100. Okay, so that's what Cromford Reports considers a balanced market. It's anything that's close to 100. And when it goes on the other side of 100, it becomes a buyer's market. Well, we can look up here and we can see that while things may be down, things maybe have come down, nothing is still close to a buyer's market, okay? And why is that? I don't want to use seller's market in the sense of it's a seller's market like it has been in 2021 when we have multiple offers. It's not that. It's just that there's no inventory. So if the house is priced right and presented well, then it will go usually in the first week, but definitely in the first 3 weeks. Okay, among the secondary cities, Grindings has a lower CMI at 90, but this has moved up over the last month. Casa Grande is low CMI at 90, but this has moved up over the last month. And Casa Grande isn't on this list because it's considered just a smaller city than it's not one of the largest cities, okay? Okay, so on that list, it has a CMI of 90. This has moved up over the last month, meaning we have no more buyer's markets left, so what I was just talking about. Casa Grande has been our weakest market over the past 12 months until we had a buyer's market. And West Milton had been a buyer's market since August of 2022. Maricopa County affidavits have been counted, and so far the numbers for June 2023, we had 7,665 closed transactions with a median sales price of $470,937. Closings were down 19% from June of 2022 and 7% from May of 2023. The median sales price was down 3.3% from a year ago, but up 1.6% from last month. The median sales price has risen 5 months in a row and is now up 7.1% from the low point of January 2023. New home sales totaled 1,657 with a median sales price of 519,101. But the new home sales closed count was up 8.1% from June of 2022, but down 17.1% from May of 2023. New home median sales price was up 3.7% from a year ago and up 2.4% from last month. The resale transaction count was 6,008 with a median sales price of 450. The resale count was down 24% from June 2022, but up 7.1% from May of 2023. The resale median price was down 7% from last year, but up 5% from this month. The resale market shows that prices are continuing to recover, but remain lower than a year ago. Closed transaction counts also remain very weak for resales, hampered by the lack of supply and demand. Closing counts were much stronger in the new home market, at more than 8% from last year. Pricing was also higher for new builds than a year ago, with the median price staying above $500,000 since May of 2022. The mood in the new home market is positive, while the resale market continues to limp along. Market share for new homes was 21.6%, while this time last year was only 16.2%. And then here is a chart, just basically, other people that say there's this big foreclosure wave coming. Well, show us how that's going to come here. So if we take away, we have 2015, right? Well, let's just take away everything but let me do this. Oh no, this one won't. Okay, we'll go there in a minute. Well, I'll click on a different graph. Okay, pending foreclosures have been in decline for almost 3 months now, and have gone back down to the levels that we saw this time last year. All the lines of the chart are quite low. The highest line was from 2015, but that's because we did not select years prior to 2015. You can see the interactive chart here. So if you want to select, in 2009, we have 50 pending sales, okay? And right now we have 939. So, and just because, let's give it a try here, because I want to work on sharing my screens more for those of you that may watch this in the future. Okay. So, for fun, let's take away everything. For the majority of everything. I want to put 2008 and 2009 here. Okay, can even get rid of that. All right, so based on what we just told you about inventory, and that we have 939 homes in foreclosure, or foreclosures pending. Where's that inventory going to come from to have this big housing crash? Now, I know that there's something that could be happening, something big economic that could happen that we foresee yet. I mean, nobody has the true crystal ball. I just think right now, and what we're advising clients to do is to, if you feel comfortable with your payment, and I know I've said this for a long time, you should jump in to the housing market, especially if you're planning on being there for a while, because it's the greatest way to build wealth is through real estate. And there's different things that you can do right now. There's seller credits. Sellers right now, especially if the home's been on the market for a while, perhaps instead of asking, or your client asking for money off the purchase price, maybe the seller will give 1%, 2%, 3% back, or towards closing costs. The buyer could use that up front. Granted, you always need to make sure to check how much the closing costs are going to be and how much, the seller would be offering to make sure, you can use up all of those closing costs, but let's just say that you can. So you can use up, let's say, 1% to help buy down the rate of the loan over the full loan term. So let's say that's 30 years. it can save hundreds and hundreds of dollars by doing it that way. And that's stuff that we can negotiate right on this market. So don't just think that price is something that you have to pay, out of the gate without negotiating. Don't think that you can't get the rate down. Talk to your real estate agent, have them talk to a lender that they know, like, and trust, and work on getting those numbers and seeing what you can do. But if you can get into the market and start building equity, that's so important, rather than just sitting on the sidelines and renting and paying somebody else's mortgage. So I just don't see what the numbers, how that's going to happen to where we're going to have this big wave come in and have this big crash. Now, I know it's expensive out there, believe me, and I know that prices coming down or having the market really come down would help a lot of people. I feel for that. I also think that there is a way to really make this work. If you're a first-time home buyer getting into the market, make sure you talk to an experienced lender that can tell you all the different loan programs. Okay, let's see here. Let's go to so this is just active listings on the market. 7,989. And this time last year, we had 12,187. So that's just a really big difference of inventory. So we just don't have we have low demand, but we have even lower supply. Okay, all right, let's go over here. And I love going to Housing Wire. I think it's a great place to get more information on the housing market. So let me just pick a blurb out of here. Okay. The slow zombie crawl of the housing market went even lower last week as inventory was negative week to week. In addition to the mortgage rates rose yearly as labor data stayed firm on purchase apps had their first negative week after 3 straight weeks of positive growth. Active listings fell. Now this is nationally, not locally anymore. Active listings fell by 866. Mortgage rates rose to a year-to-date high of 7.22, and purchase apps were down 5%. But again, we have no inventory. We had a trick in the housing market last week. Active listings were negative week by week. New listings were negative week by week, and active listings, new data is negative year over year. It's an unhealthy housing market. We've had too many people chasing too few homes. But again, we just have more demand than we do homes. The housing inventory growth is slow this year, that the active listing data in July isn't even higher than our January levels, which is typically when we see the season bottom out for the first half of the year. As we can see in the chart below, year-to-year inventory is negative versus 2022. Another big story has been that the new listing data has been trending at the lowest levels recorded in history for the last 12 months. We've had 4 straight weeks of declines, and we're about to run into a seasonal decline in this data line. As we can see below, there's a big difference between 2023 data for this week versus 2022 data. So here we have 2022 data is the green line with new listings, and here we are with that. And why is that? Well, that's a large part because, as we talked about earlier, so many homeowners have interest rates below 4%. So why are we going to give up our interest rate at below 4% to jump to a 7.09% interest rate? I think when we come down, and I'm hoping that we do come down, but I think, even in that 6.50 range is a more number that's easier to digest than when we go up over 7%. Mortgage rates started the week at 7.03% and ended at 7.14. The 10-year yield is close to yearly highs as the U.S. bond market doesn't see job loss recession happening soon. As you can see below, bond yields rose noticeably during jobs week. Okay, and here's the forecast here. So in my 2023 forecast, and by him, I mean Logan Muchama. I'm not pronouncing that right. I'm sorry, Logan. Logan Muchami, we'll say. I'm sorry, Logan. I'll work on that. Okay. let's see, in his 2023 prediction, and I also think if you can follow him on Twitter, he's a great one to follow on Twitter. Okay. All right. Okay, in my 2023 forecast, I said if the economy stays firm, that the 10-year yield range should be between 3.21% and 4.25%, equating to mortgage rates between 5.75% and 7.25%. The labor market remains healthy as long as jobless claims trend below 323,000 on the 4-week moving average. As we can see below, the 10-year yield has stayed in this channel 100% of the time in 2023, but mortgage rates are on the verge of breaking over 7.25. And here we can see the 10-year yield. As the spreads between the 10-year yield and the mortgage rates have worsened since the banking crisis, there has been added pressure on the rates to be higher than they would have anticipated in 2023. The chart below shows the spreads rising after the SVB banking crisis started. So you can see that right here. Okay. Purchase applications was down 5% weekly, making the count for year-to-year data 13 positive and 12 negative prints. If we started November 9th of 2022, it's been 20 positive prints versus 20 negative prints. Considering mortgage rates have been near 7% and above the last month, having 3 out of the last 4 weeks being positive shows the collapsing market in 2022 did change after November 9th. But remember, the bar is so low with purchase apps that we can't trip over it. As long as we know that the data has just been stabilized and the waterfall dive, we're in the same boat with data this year. So we know how the market went up, arguably here in Phoenix, it was April, May of 2022, that would have been our peak. And then we really fell down through November, I would say until about, January. And I would say right now we're stabilizing and, if anything, we're flattening out, maybe with a little bit of appreciation. Okay, the week ahead, inflation week. This is this week, all right? Inflation week is here again. We have 2 inflationary reports to work between the critical CPI data and the PPI data. We should see the same story. The headline inflation data is falling noticeably, but the core inflation data is a bit more sticky. Still, the shelter aspect of inflation will kick in more here. With used car prices falling over the next few months, below is the year-over-year average CPI data. Okay. So just something to track the 10-year yield, more to come out, this week. Okay. This is the Black Knight report that came out. If you want to go to that and see that, I won't bore you with that today. Okay. Let's just go back to the Cromford report for a minute. Okay, so let's just end here. Okay, so active listings are 14,303 today, and this is including, when I told you the number before, it wasn't including under contracts, like under contract accepting backups or contingents. This number, I believe, does include that. All right, bear with me. I'm still perfecting the sharing and the talking and everything else. All right, so 14,303 under contract of those is 2,969. That makes it about right. All right. Yes, that's what I told you earlier. It was I told. Anyway, 11,300, including including under contract. Got it. 11,334. Pending listings is 5,244. Listings under contract is 8,203. And see how this difference varies from last year. Last year we had 15,000 active listings, and definitely, we had a little bit more pending sales. But if we go back to the last quarter, we had 16,000. And remember last July, we had 18,000. So we shot up a lot. We went from 10,000 in 2021 up to 18, and then now we are all the way back down to 14,303. So, and average price per square foot for active listings all over Maricopa County is 355.7. Okay, and that's okay. All right, so to cap it out, okay, so let's just take a look at the mortgage rates just one more time. All right, so for 30-year fix is 7.09%, 15-year fix is 17.42%, 30-year jumbo is 6.9%. Again, this is nationally. 5-year 5/1 ARM is 7.14, 30-year FHA is 6.79, and 30-year VA is 6.80. All right, well, thank you for tuning in with me for my very first live and suffering through that with me. If you liked it, give me a like. If you want to subscribe, I would greatly appreciate it. I promise to get better at sharing this data and to have it flow more eloquently. And remember to get homeowners insurance and homeowners fire insurance if you live in an area that you would need that. And again, hope everybody that was affected by the Baird Springs fire is doing okay. All right, until next time.